Bitcoin violently tumbles to 113. Does that mean it's the top of the cycle? Is it over? Are all-time highs no longer in sight? Yes. No. Well, maybe. Find out on today's Sunday Fuel.
The year is 2020. As the old financial empires collapsed and crypto drowned in noise and false prophets, one man lost everything. And in that loss, he was called. Through the wreckage of his own failure and the precision of his charts, a higher force revealed what others could not see and entrusted him with a mission to guide others through the chaos he barely survived. They call him Sacred Prophet. And now, the revelation is yours to claim.
Welcome, everyone, to Sunday Fuel. I'm your host, your fearless leader, humble beyond all humility, Sacred Prophet, with my trusty sidekick, Aaron and Traden, Peter Bad Guru Hartman. On this August 3rd, 2025, we visit woes upon the faithful in the realm of Bitcoin as it tumbles to 113 spectacularly amidst tariffs from Donald Trump, our fearless leader. Let's all praise his name and may he reign forever.
It's because of tariffs?
Yes. Well, you have to say admits and then whatever bad thing happens. You also have to say a thing happened admits, because that means, is it correlation? Is it causation? Is there two things that happen at the same time? There's no way to know. But
what happened with tariffs recently?
They got ratified.
Oh, August 1st. Is that it?
Well, the decision came into play. But what's sad for us is that we were hoping for 150 on Bitcoin by the end of this month. One, to make money on Polymarket, and two, to prove me right. But as we found out, Sacred Prophet is always right, but sometimes wrong. That's just how it goes. That's how it goes. As we talked about last week, there's a path dependency when it comes to trading. And unfortunately, because there weren't enough of you believers on the bullish side,
no,
the price went down.
Show me a chart.
I tried to rally the troops, Peter. I tried to make them be what they needed to be.
Show me a chart.
Chart on the screen. Let's go to the chart. I tried to make them understand that we needed them, and they failed us. You know what this feels like? It feels like Moses coming down with the tablets, and everyone's cavorting with the golden calf.
I don't think it's like that at all.
And I dashed the tablets upon the earth.
Okay.
Did you know Moses had to go back up for a second pair of tablets?
Yeah, I did.
There were 12 laws before, 12 rules, and then God could remember the other two. He's like, let's just do 10. All right. Let's take a look at last week. Now, I should say, if you use the indicators from sacredprophet.com, the free indicators from our website, not only would you see all this play out, but you would have been able to make money along the way, because we actually did have a trade last week. Do you remember what the trade opened at last week, Peter? Over here, it was a trade at 119 to fall to this level over here at 117. I believe that's what it was. Yeah, here to here. And did we get that fall? Yes. Now, what we were hoping for is that on Marauder Monday, we get a move that has a counter trend move for the week that follows. That means if it falls on Monday, it usually rises for the rest of the week. If it rises on Monday, it falls for the rest of the week. We did not get this because this rule isn't 100%. Whenever you're dealing with external volatility, external news, you can't really plot that on the chart. All that happens is that as the price moves, according to the event, you have a better idea to where it might go. So after that trade that happened last week, which was successful, the price fell down to where? 113. Guys, we've been talking about this level at 113 now since it got created back on July 14th. And do you guys remember what I was saying about this level 113? the fact that we hadn't touched it this entire time. What was I saying about that? Can you remember that, Peter? Can you bring the class up to speed?
You really, really, really wanted it to get to 113 because it was the responsible thing for Bitcoin to do.
Exactly. We want to, in order to walk our way up, when we're looking at the chart, the price likes to walk its way up to higher highs. And if we skip levels, like we skipped over here, this was the price of, let's call it 99 that was made May 11th. This was this level here. What happened? What happened is on every other all-time high attempt, all the other breaks failed until we got down to that level, to the 99 level. And once it cleared, what happened, folks? We rocketed up. Do you guys see that? Are you seeing this?
Okay.
Once we clear the levels, then blue skies await us. So I was hoping that we would hit this level before the end of the month. It didn't happen. It took the entire month for it to occur. I was hoping we were going to hit down over here, and we didn't get there. Fine. So we take a look at last week. The price, our trend in the back here, you're seeing the trend turn red here, 1, 2, 3. Yellow here, and then red again, and then it fell through. All right, fine. Once it fell through, the price came straight down to where? 113, exactly the level that we're talking about. And it went a little bit further still. Do you see where it went a little bit further down there? Where did it go, the price? It went to our wave level, right here, right on the nose, because it was nearby. All right? And at the same time, we have our trend back here turned yellow. So these are all signs of a potential bottom here, folks. Plus, we take a look at the violence of the rejection off the low. It gives us confidence that there is a bunch of orders in this area. All right? So last week, we had the first trade, which was a success. That was a trade of 1.64%. So that was a 50% trade, or a little bit more than a 50% trade. And then if you took the short down to the bottom, you could also make money from the break, which would have been from around here. And you could have made something like 2% on the drop, which would be 100% trade. This is where it comes in very handy for you to have these indicators yourself. It's challenging for me to provide you with every move, day by day, move by move, because so many things can happen and you can make your own decisions. Soon, we're going to be having our Telegram group up where you're going to be able to go get a little bit more granular news as I pay attention to it throughout the day and throughout the week. But for right now, definitely, and in general, having these indicators yourselves makes total sense, and it is free to do so.
But also there's the signals on the dashboard. The signals are useful. Maybe you're someone who doesn't trade with indicators, or you don't really want to mess around with that, but you want to know for bullish what the call is right now. The dashboard is showing you those signals. Am I right about that?
Yeah, that's right. So if we take a look at our dashboard, you'll see here that the signals that come in, even if you're not trading directly, lets you know these are not trade signals. These are trend signals. So lets you know the trend that we're in. And so the last trend that I put out was on July 27th, so last Sunday, and we were in a bearish trend. That's what I had put out. We're in a bearish trend. We're likely to move from 119 to 117, and that's exactly what happened. Total success rate. So these are trend signals. So far, all the trend signals have been perfect. What we don't say, and what I can't say, is in what time frame this should occur. The trend signals just say that this level is likely to be hit, but it can happen a week, a month later. There's nothing we can really do about that. What matters, you might ask, well, Tom, why do you then give the signal if you can't say the time frame it happens in? Well, because usually people have difficulty when it comes to trading, right? You need to know your entry price, your exit price, what you should risk, your stop loss, and your take profit. We already have a bunch of that information already taken off the plate. For your entries, we're very clear on our entries. We enter in on the levels for our indicators, either on our wave levels or on our either on our wave levels or on our anchor levels. These let us know where we should get in. We don't usually get in anywhere other than that. There's no FOMO into any position for us. For our exit signals, we have for exit, we like to hold our positions long, because we want to take as much of the trend as possible, either up or down. What direction you should be trading in, that you also get with the trend signals, if we're bearish or bullish. So you know that if you're going to be taking additional trades on your own, what you should do. So this does a lot of the heavy lifting. The only downside for that is that I can't tell you necessarily the reliability of how long it'll take to get there. So there is a path where you get liquidated before you get to that level. And I can't tell you how many times you should take that bet.
So how do I know when to get out of the trade? How do I know when it's time to take profits?
You got to take profits when you feel comfortable taking the profits. Now, the way that I bet, I talk all the time, I only bet 2.5% of my position every time I enter the trade. And sometimes I'll add more to a position if I'm in the money and it's going in my direction and the charts agree with me, but I've never bet more than 2.5%. And that automatically, because I trade at 50x leverage, is my stop loss. My stop loss is the liquidation of my position. Some other people, you might not want to do that. Some of you might want to trade at 25x leverage, take a larger position in order to make the same amount of money, but give yourself more wiggle room in order to suffer the drawdowns. And some people, it's too painful for them to lose a position, and other ones they're degenerate gamblers, and they're willing to trade this at 125x leverage and see what they can make. All that is up to you. So how you should know when you should exit the position is whenever you feel comfortable. Maybe once you get up to 100% profit, you set your stop loss at 100%, and then whatever you make above that is gravy, and you just trail it or you adjust it as you go along. Maybe you sell a bunch on the profitable positions as you go up, and you don't close it all the way, and you add back more when we get dips, whatever it is. But it all depends on your own trading style and what kind of risk you want. What we don't want to do is miss our entries. Our entries are the most important, because our entries are, generally speaking, the most extended that price will get. If it's a perfect entry, then chances are you're either at or just a little bit away from exactly where the price will bounce off from. And you can't get a better entry than that. This is why I call them perfect entries.
Was 113 or is now a great time to enter a perfect entry?
Well, the perfect entry would have been around for perfect entries when it comes to trend reversals. So while we are always in a bullish trend, the bullish bounce becomes a perfect entry because there are all these stair steps up. So yes, for me, 113 is a great entry over here. But whenever you have that and nearby are other levels, so here one of those levels is the wave level, then the perfect entry is the lowest level, is the furthest of the cluster, because that's where the wicks end up. So over here, the perfect entry was at 111.950, which is exactly there. You guys can see it. It's literally right on the wave, right here. This level is the perfect entry. But I also added into over here because I already have my order to enter in when I get to this level over here. That's perfectly fine. Now, the issues that you end up with is that, let's say you were doing 50x leverage and you entered it at 113. You would have gotten liquidated over here. Actually, would you have gotten liquidated yet? Let's see. No, sorry. You would get liquidated at 2% down, right? Because if you're trading at 50x leverage, a 2% move will liquidate 100% of your position. So sometimes the price falls and it goes down more than 2%. You're like, I should not have gotten in there. But that's why exactly. That's where I would get back in. And you go and you might ask yourself, how many times should I try to get back in? My rule is my target is usually what I look at other levels that have been unmitigated above me. So for example, over here, I could take a look at this daily level here at 117. And this other level over here, well, it just recently got mitigated, but over here, 117. And depending on how big that move is, this move up to over here is 5%, or I can go to all-time highs and I can think to myself it's an 8% move. I go, okay, well, if it's going to be a 5% move at the 50x leverage, I'll make 2,500%. So I could try Every one attempt is 100% of that. So I could try multiple times before I fail. But all that has to do with the price. If I keep entering in that the price keeps falling, well, I'm not going to be silly about it. I'll be like, okay, there's some other trend that's happening here, some other levels, maybe there's a trend reversal happening. But usually I'll enter in if the trend is the same, like I'm bullish and it's going up and it keeps wicking down to liquidate me out, well, then I'll get back in because it's still proving that we're moving up.
So this is why it's very important to have indicators like this, because you can see if the price, if the action is matching the levels that you're seeing on the indicators. The more that you're seeing it's bouncing off of those, that it's reacting or responding to the VWAP, to the volume weighted moving averages, the more you see that it's following what your indicator is saying, the more reliable and the more you can trust that this is a good place to enter. Because if I don't have these indicators and I see it go down to 111, I don't know if it could go down even further. I don't know if this is cratering down 80% like Bitcoin tends to do. So these indicators help me to make a better decision. Should I place my bet here or not? Do I have that right?
Absolutely. So if I were to take a look at the chart right now, let's say I weren't in, I want to get in. Since I'm in a yellow area and my price is over here, I'm in between, I've already cleared this top level here was already mitigated. This is a daily level that was created from over here, from 2 days ago. But I have a new one down here from today. So I would place a limit order right over here at 112.9, or let's call it 113, right here, expecting the price to dip down, enter in, and then move up. Right? If I was worried about that, I could put another position right over here, which is this trend meeting with the developing daily level. Because I know that tomorrow's daily level, if the price stays where it is right now, let me zoom in, will be 113.6. I know tomorrow that'll be the level, right? So maybe I don't want to risk waiting until I get down here. So I might set a limit order here at 113 and then another limit order here at around 113.6. So that if the price pulls back over here, I get in. Or I might be even more of a Frady Pants FOMO and get in here at 0.5% of my portfolio, just to say that I'm in, then have another 1% over here and another 1% over here. But I'm using the indicators and my levels and the trends that I draw in order to get that idea. Do I want to get in over here? Do I want to enter, place another limit order here at this level? Probably not.
Why not?
Because since I was already there,
oh, I see. You mean like
chances are if I come back, I'm breaking down. Just like over here, I got in, but after it went up over here, not only did not continue its way up, it rolled over and came back down. So over here is not a good price for me to get in because I've failed the bounce. I have a lower high and I'm rolling over. So chances are I'm headed back down lower. So if this, for some reason, heads over and comes back down over here, chances are we're breaking lower. Not guarantee, but chances are.
Interesting.
So super useful to have these indicators in order to help you guys out.
So if we break lower and you set it at 113 or thereabouts you were talking about, won't you still be washed out?
No, because if it bounced over here, this would be a higher low, which is a bullish trend. If you get higher lows, that confirms a bullish trend.
No, but I'm saying if it continues down past that, but you set limit orders at 0.5, at 1%, 1%, won't you get washed out of those positions?
Yeah, that's always a possibility. But it's less likely to happen. The price is less likely to, or the conclusion you should get to that the price is going to fall should be less likely over here and over here because price usually bounces at the VWAP level. It's less likely that from over here it nosedives down.
Right. Less
likely. But it could absolutely still happen. All right.
Just before you go any further, if I set at 113 a limit order, and then it doesn't bounce, it goes down, then do I immediately exit my position?
It depends how it's happening. So if it's going down because it's stair stepping down, it's sort of like naturally moving lower. That's very different than if it knifes down.
See.
Right? So if
So
it knifes
should I-
down, you might be looking for some news. Hey, is there some news that's happening? Could be some volatility. That sort of thing happens a lot during Fed days or GDP reports or CPI reports, where the market's trying to digest the news. And so it goes up, it goes down, it goes up, it goes down, and you can get liquidated and washed out all the time.
Mm-hmm.
Right? Now, where the price goes up and down and up and down. And so just because it knifes down doesn't mean that that's where it's going to go. You can always be in a wick. This is what I always tell myself. I could be in a wick right now. Let me not act crazy. That's why you want to make sure that the bet that you place on, you're fine with losing it. Otherwise, you're going to be all nervous and squirrely and looking to get out of the position before you should. Like
So
over
what if
here,
just
to give you that example over here, this candle over here actually went lower than this level over here, right? So you might say, hey, Tom, isn't that what you're saying? If it goes lower, then that means we're probably going to break lower. Well, no, we have to look at the candle close. And the candle close here is actually a higher close. But there are people who panicked inside of this level over here, inside of here. Mm-hmm. They panicked and they sold or even went short, which helped cause this move up because they get liquidated. It bounces up, and then it moves forward. So this is actually a clearing of liquidation, a liquidation sweep, and then we moved up. So you don't want to make rash moves while you're inside of a wick. You want to wait for the close of the candle, and the only way you can wait for the close of a candle to make your decision is if your position is sized appropriately. If you have too large of a position, you will not be able to handle emotionally holding that position. There's just no way.
So so my question was going to be, and I'm guessing you don't recommend that you set a limit order at 113, for example, and then set a stop at 110 because it might play funny games and wipe you out when you shouldn't?
Well, set a stop for two reasons. One, if your position's large enough that it makes sense that you don't want to lose your whole position, totally understand, set your stop. That's your stop limit. When I'm saying that I had no stop, my stop is my liquidation price.
Right.
That's what I mean by that. It's not that I'm just like being willy-nilly, I just put whatever on and I don't have a stop. My stop is my liquidation price. But if you have a larger position, then no, your stop, you would actually set an actual stop loss there. The issue with that is that some people, like my old self, will move my stop loss. So if you know for a fact you cannot be relied upon to not move your stop loss, then don't say, well, I'm going to put a larger position because I want to make a lot more money if it goes up, but I'm going to set a stop loss. You won't.
You underestimate my power.
Oh, the other voices in your head, what they're going to do, right? Some people, they can't handle, they'll add to the position. They're like, I should have gotten in bigger before. I'm going to add right now. And if that's the pain you choose, if that's the kind of person you are,
has incurred the sentence of excommunication.
Get out of here. You can't trade. Get out of here. Beat it. You can't trade, buddy. It's not for you. Not for you. You got to choose one of your four pains. In too early, too late, not in at all, can't get out. These are the four pains. If you got to choose which one it is, and there's a couple of those combinations where, sorry, you got to get out of here. Your trait openness is too high. You can't be president. I'm sorry. You can't be president if your trait openness is too high. Go be a teacher. Go be a health worker. Sorry.
All right. So you were showing us what happened in the previous week. Did you have more on that?
Nope. Let's move on to what'll happen for next week.
Before we move on to next week, I got to address it, okay? I know you've been talking about the 113 level for quite a while. You were gunning for it. You were hoping for it. You were wanting it because it would create a clean slate, wiping out, I guess, all the shorts and whatever the magic lingo you talk about, the jibber jabber, and then we can go up cleanly without fear of something happening. But then you gave up on that. then you called, well, you put that to the side, and then you called for 150. So we got to address the 150. People are going to be like, hey, you can't be just like calling these things and not talking about when you got things wrong. So you're expecting 150. What happened there?
So we did have a breakout that was happening here. So this was 2 weeks ago. We had a breakout that was occurring, which happened, actually 2 failed breakouts, one over here and then sort of over here. And what was going on was that the shorts were being liquidated. And there was a high likelihood that we would break up from 150 for above 123 then to 150.
And you
So
saw
that's what I
that
was
you saw that looking at the liquidation map. That's what you were showing us last time.
Well, let's just be clear. The 150 level, whenever we're dealing with blue sky territory, the levels I'm talking about, the prices I'm talking about for where things can reach are just about estimations, about historically what has Bitcoin done when it has moved. When I'm talking about levels and our waves from anchors and cycles from our indicators, those are specific levels that only exist where price has been before, right? So only where price has been before can actually point out any of these levels. These blue lines, these yellow lines, these red lines, all these waves only exist where the price has actually demonstrated some sort of history. When we're talking about moving above these levels into blue sky territory, all we're doing is talking about trend lines. And there's a reason why I don't have any indicators inside of a library that reliably plot trend lines. In fact, I don't know any systems that reliably plot trend lines because they're incredibly difficult to do. The reason why they're difficult to do is that there is no human psychology behavior in those levels, not anything deep. When it comes to VWAP levels, let's say, what's happening is that there are larger players that need to get in or out of the positions, and they need to cover that up at these VWAP levels so that they can buy at the best available price. These are just normal. This is just the mechanics of the markets. This is why we trade off of that. So if we know it's going to rain, well, then you can go out and collect water. You're not worried about it. It's raining right now. You're not wondering if you could be able to collect water. You know you can do it. How much it'll rain and how long it'll last and quality of the rain, all that will change. But if it's raining, that's what those levels are like. When you get into blue sky territories, you don't know how things will move. And the trend lines, what the trend lines are in a multidimensional sense, is that there are these, I think of it, if you think of a river flowing down and there's wood floating in the river, there's these wood levels that are there, or banks or things that you can't see that are hard that the price is bumping against. And you cannot tell the shape of that, how big, how thick, how deep, how fragile it is until you clear it. Then you get the shape of it. So at those levels, when I'm talking about blue sky levels, I'm given estimations as to where I think my trend lines are crossing and where things might go historically. Is that clear?
Yeah, that makes sense.
So the 150 that I was calling for was just an estimation as the maximum price, or one of the maximum levels that I thought Bitcoin could go to. Now, the timing of it, the reason I thought it would happen then is that there's only a certain amount of time that we have in the market, and it has to do with how players are positioned and where we are in the calendar year. 4 times during the year, we have higher likelihood of bad things happening, volatile events happening, right? That's March, June, September, and December. These are the 4 times of the year where you have options expiry, low volatility is low supplied, there is usually increase of volume, and events can get exacerbated because of gamma moves. And usually this happens in September or March. That's where crashes usually happen, either in September or March, because people are on vacation in the summer and in the December holiday season. So I was thinking to myself, well, if we're going to get up to new all-time highs, it would have to be, generally speaking, before September. That would be my guess, before September, October, any potential volatility or crash. And so that's why I was thinking to myself, hey, this is where the break seems to be happening, and it would make sense if the price moved here. The chart would make total sense. But these are all estimations. But the thing is, Sacred Prophet is always right when he's getting liquidity information from the Lord of Liquidity. Tom Hartman, hey, he's human just like the rest of you muggles. He gets things wrong sometimes.
Michael in the chat says, yo, hope you guys are doing well. Hope you're doing well too, Michael. Thanks for being here. Thanks for watching. Appreciate it.
One thing I was actually nervous by,
yeah,
not nervous, but we needed the tinder of the shorts in order to move up, right? We were getting a little bit of traction. We crossed 1 billion liquidity leverage level for some of the longs, and that was okay. But I mean, I'm looking for a cycle talk. I'm looking for longs to be 10 times more, 20 times more than the shorts, and we're not getting that. We have not gotten that. We weren't even close to that. We weren't even close to equal, and so we did have shorts, like 7 billion shorts or whatever, and that actually increased to like 10, 12 billion during the week. And now we're even up to 17 billion versus 500 million. That means we're like 34 times more short than long, right? So I want that number to be as big. I want this number for shorts to be as big as possible and as filled here as possible. Like I would want. Right now we have one peak over here, but I wouldn't want to peak over here. I would want them to be so short that they've been short this entire time. But we haven't gotten that. We got lopsided shorts versus longs, but we need a catalyst in order to get them liquidated. And now we have more shorts now than we have had over the last couple of months. So every time we have these pullbacks down, more shorts get in. So earlier on last week, when we had to pull down to actually over here on the 25th and then over here on the 30th, every time the price pulled down, we added a few billion more shorts. And this drop over here has added more shorts still. So now, if we're ever going to blow up, like the further it goes down, the more likely that the explosion will be unbelievably explosive. And we want this to be as much tinder as possible so that all the shorts, every goddamn one of them is prepared, thinking that this is the cycle top and they're ready to explode. That's what I want. That's what I want to see, because you can get an explosion like that to all-time highs, even if the economy is suffering and recession is happening and all that sort of things going on. So yeah, that's what happened with the 150. Does
our friend too slow, too late, Jerome Powell factor into this at all?
High Priest Jerome Powell, may he reign forever, is not cutting rates. He should be cutting rates. By their own definition, they should be cutting rates. They even say we would be cutting rates, but for Papa Trump. This is a problem because this can cause a crisis. And in fact, as we're talking about the week coming up, this is the thing that is worrying me the most, and that is the dollar. The dollar, mon frere, is the opposite of all bets. Anytime anyone is holding an asset, it means they have sold dollars in order to get it, ultimately, right? They've sold currency in order to have this asset. So whenever the dollar is going down, it means people are selling the dollar to buy other assets. And when the dollar is going up, people are selling the assets in order to get dollars. Why would they win dollars? Well, it's because the only reason they have the asset, other than using the asset, like a home or something like that, which really is a liability, when they have stocks or assets or investments or whatever, they're doing that in order to have a promise of dollars in the future, right? The person set up a business, the person is taking out a loan, the person is buying stocks or whatever it is because they want to have that money in the future, those dollars in the future. Right. If they worry they won't be able to, then they sell the asset to get the dollars now. If they think that the $50,000 investment they're putting in this thing will yield them less than $50,000 in the future, they must sell that asset now, because why would they hold on to it and get less dollars in the future? The only reason they got it was to have more dollars in the future. So you see the dollar go up when people are selling assets for dollars. There's no such thing as selling asset and then the currency not moving. Like, that's not how it works. It's the other side of the trade. So we've had this drop down of the dollar since the beginning of 2025, basically since Trump became president, which same thing happened in 2017. Raoul Powell over in Real Vision has a whole series on this, talking about, hey, we're sort of like repeating the cycle of what happened with Trump last time, and it made sense. We have the dollar that goes down, and with this dollar going down, we've had this bull run. I mean, we've had a bull run in crypto since 2023, October 2023, but it's up with that. We've seen all-time highs in the NASDAQ, all-time highs in gold, all-time highs in the SPY, and then some single stock names, Nvidia, Facebook, Amazon, Apple, all that sort of thing. But the dollar bounced here at the 96.5 level, 96. Yeah, let's call it 96. And since this bounce up, it's correlated with the low in the pressure, the downward pressure, the selling pressure on Bitcoin. Let me just add Bitcoin over here so you can see. So you see over here with Bitcoin falling over here, it coincides exactly with this over here. All right. So if the dollar keeps moving up, there's almost no real way where we're going to get the blow off in Bitcoin.
And that's because of the rates not being cut.
Well, the rates not being cut isn't helping us. All right. So the whole point of the cutting of the rates, the idea of it is that it would release liquidity because you make it less likely for people to save money because they could make more money inside of the markets. Sort of like a mob mafia thing, right? Some guy comes in and goes, look, I know you've been comfortable getting 3% interest rates here, but we're going to have to take that down to 0. But sir, how am I going to make money for my children? Well, it's nice, it's a nice gold you got going on over there. You probably want to sell that money and put it in the market. The market's going to give you some return. Well, the market's volatile, and I'm not sure it's worth it. What if it goes down? Well, what's for sure going to go down is the value of your assets and your money. I'll let you put it in there. So I'm going to need you to go ahead and do that.
Okay.
So the lowering of the interest rates and bringing it down to 0 sort of forces money that has a cost in and of itself, right? The money, the currency is losing value anyway. And so people go, well, I have to go buy assets now in order to get some sort of yield. And I need liquid assets. And so the most liquid asset is Bitcoin. Most liquid, highest performing. And so you go, okay, people go in stocks, people will go in bonds, and people will go into crypto and a bunch of real estate, all that. So it's supposed to release money in the system. Granted, long term, it's actually pretty terrible and transfers money from the poor to the rich. But hey, what are you going to do?
Yeah,
that's the game we're in right now.
That's the game.
Just make sure you're the one who gets the money, and then you get into power, and you go do something different. You go do it. You get into power and do something completely different, and make the system so much better for the poor. You do it. No, honestly, please, someone do it, please. Someone take it to mental. All right. So if this dollar, right now, we're still in this downtrend for the dollar. If the dollar breaks above 101.7, when I say the dollar, I mean the Dixie. In fact, I should even change this to the Dixie so you guys can see it a little bit better. Oh, no, I can't. Never mind. I have to do it this way. Let's call it around, it'll be around let's call it 102. Let's call it around 102. If the dollar breaks above there, then we're breaking into potentially bullish territory for the dollar. And then you're going to see the conversation with Tom just completely change, totally different.
Oh, ominous.
Sacred Prophet will still be on the side of the Holy Global Empire, but Tom will be pretty scared. So we have here, it's very clear that our trend indicator on the dollar, I don't know if you can see how clear this is, Peter. You know, red, 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 yellow, green, 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 yellow, a red, 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 and then yellow. Dun, dun, dun. That means bullishness is potentially likely. Now you can get these yellow phases that happen as a short-term trends. Like here it's red, then a little bit yellow, then back to red, and it does happen sometimes where you have red, 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 yellow, it turns green for a little bit, and then back to yellow, red, red. It goes even lower. So you can still have that. Same thing with the green. It could turn yellow temporarily. So just because it's yellow right now doesn't mean it's going to turn green, but it can only ever turn green after a yellow. I don't know if I've ever mentioned this inside of my indicators. You've never seen the trend indicator go from green to red or red to green. It always goes through a yellow phase. So we're in our yellow phase right now. And where did we see the dollar go up? Exactly the top of the levels. These levels here, these boxes, it's not for nothing. It's not some mystery. It's exactly this level. That's where it went. And where did the price of the dollar turn around? Exactly at that level. So it lends itself to the idea that the dollar is going to continue its downward trend. It does lend itself to that idea. Now, I think the dollar could only go down so far. So if it comes down at all, it'll be like towards here towards this 90, 96, 97 range. And if it broke below that, I mean, I'd be flabbergasted. If we broke below, let me just go back to the daily dollar over here. If this dollar fell and went below over here, oh boy, I mean, that would be hella bullish. That is more parabolic upside. I'm not even betting on that. But if that happens, wow, I'm going to be, just get assets, both hands. And it would sort of make sense here. You see where the dollar is meeting at this resistance. This 100 level has been a resistance level for 10 years now. And then all these different wave levels and volume weighted average price, these are all levels here where it's resistance. So it makes sense that it'd be hard for the dollar to go through there and come back down over here. I mean, just think of it. The dollar, in order to get it below this 100 level, had to bounce once, twice, 3, 4, 5, 6 times in order to get down below there over 10 years. Well, not over 10 years, over several years, right? And during COVID, it tried to break above this 100 level and completely reversed, didn't even make it. So that's sort of like where we are now. It's trying to go up underneath over here, but chances are this is what will happen. The dollar's going to go down. Know what I mean? Because the central banks want the dollar to go down. I'm not sure that's clear for everybody. Nobody wants the dollar to go up. Everybody wants the dollar to go down. Fiscal, monetary, other countries, everybody wants to go down. And so if everyone makes a lot more money going down, dollars to britches, it's going down. That's what I would bet on. That's why I think the bull market is still well in force for crypto. And then we have the whole thing about we're not even in the full-fledged altcoin season yet, right? Most altcoins aren't above their all-time highs. I'm not even talking about like the meme coins and the new launches. I'm talking about OG top 10. They're not even at, most of them, above all-time highs. They started moving up, but we're not even there yet. So we're not even in the hype phase. We don't have the large leverage longs. Where none of the signs are pointing that it's the top of the cycle. None of them. So cool your jets. Take a breath. Let's look to our shorts and hope that they give us as many of their dollars in shorts as possible. And let's enjoy this ride up for the next week.
Question.
So for next week, what I'm looking at.
Before you get to the next week, we have a question in the chat here from Michael. This is tangential. Actually, it changes the topic, but I don't want to wait. Michael asks, what platform can we get 50x leverage on? You can answer through the chat. I didn't know the answer, so I can answer in the chat.
I'm in Canada, so I use BitGet. But I believe that Coinbase just now is launching perpetual futures, if I'm not mistaken. So you should be able to get through there. Blowfin, you can get through there as well.
Do you think it'd be helpful to maybe? Should we compile a list or?
Right now I would just focus on the exchanges that we have partnered with our platform. That we've integrated with. So that would be BitGet and Blowfin. Those are the two networks that we know, trust, love, and use.
Are they available in the US?
That I don't know. I believe so, but I'm not certain.
We'll take a look.
Yeah.
All right, cool. All right, upcoming week.
All right, upcoming week. So we've already, the price is already responding bullishly to the bounce off of 113. What I would expect is a drop to back to 113 to clear the daily level, and then a move up towards what appears to be the weekly level of 116.3, 116.4. We will know for sure at 10 p.m. tonight. Please go ahead and sign up for free at sacredprofit.com to take a look at the dashboard for when the signal comes through. But do you see how, or not but, and you see how we have a nearby daily level here at 117.4, 117.5? I would not be surprised for the price to move not just up to 116.4, but also all the way up to 117.4. Would not be surprised to see that. So that would be the trade for the week. At the close of the candle tonight on Bitcoin at 10 p.m., moving up to 116.4 on the low end, 117.4 on the high end. After that, we want to take a look at how the day closes, how it moves in order for us to get the daily levels. For that, you'll need the indicators. So sign up to sacredprofit.com in order to get that. Now, what do we want to happen on Marauder Monday? What we would want to happen on Marauder Monday is one of two things. Either the price moves up to the 117 level, or even let's call it the 117, What we would want to happen on Marauder Monday, one of the two paths, is the price moves up to 116.4, moves down to 113, closes Monday or Tuesday morning there, and then for the rest of the week moves up. Or the price moves down to 113 today, tomorrow, what have you. It moves up to 116.4, moves lower still down to 112.4, and then moves up. What we generally don't want is the price to breeze past here, right? If it does, we end up in another one of these situations where the price breezes past, and a month from now, we got to go revisit that. We want a healthy move up. We don't want all the shorts to get liquidated right now. We want them to think they still got a shot, and all they need to do is add a little bit more shorts in order to catch the downdraft. But beggars can't be choosers. We get the charts that we deserve. If you guys want the price of Bitcoin to go up, you know what you need to do? Buy it.
Buy Bitcoin.
Buy Bitcoin.
How is it going to go up if the DXY is going up and people are selling assets for dollars?
Well, what we saw, it was that on Friday, it reversed pretty dramatically. I think it fell 1.4%. For a currency to fall 1.4% in a straight line, it means something fundamentally changed. You got to understand, it's trillions of dollars in the market, right? For the forex market, especially for U.S. dollars, which is the undercurrent, the currency for the world, the global reserve currency. So for it to move 1% means that all other currencies had to move on the flip side of that. And mostly the euro. The euro is like the main, like 80% of the DXY is the euro. It's a trade weighted asset, but still, it means that a bunch of money sold out of the dollar all at once, and that only happens for big money players. It's not people like you and me with their forex accounts who moved the dollar down 1.4%. There's no, it's not options market that GameStop the dollar down 1.4%. I hope the condescension is coming through pretty clearly. It's not people like you and I who did it. It's big money players. And so that lends itself to the idea that we're going to go down. Plus, at the same time, that the dollar is going to go down and assets are going to go up. At the same time, we had the bond market. We had a sell-off in the bond market. Bonds actually came down lower. You'll remember, if you guys go take a look at the stream we did on Traders Post last Friday, Peter and you talked about this. Depending on if you calculate the interest rate, if you aggregate the interest rate based on what the Fed says that you should pay attention to, the interest rate is negative 0.3%. Sorry, inflation rate is negative 0.3%.
Oh,
if you
yes,
calculate
that's right.
inflation if you calculate inflation the way that the Fed says you should calculate inflation, because they always change their mind depending on what numbers say what or whatever. Just recently, they gave a sort of a general guideline for what you should consider PCE and different types of metrics. Daniel DiMartino Booth says that inflation is a negative 0.3%. That means we are in deflation, not disinflation, which is slow inflation. It's in deflation, which is money being destroyed. So we are in crisis territory. And if the Fed actually knows this in the back end, then they're doing whatever they can in order to goose the wheels. They're actually trying to provide liquidity to the markets, which would make sense that the dollar would then plummet, that the dollar came up and they're like, no, swap lines, do whatever is necessary in order to get the dollar down, because that's what they did during COVID. If we just take a look at that chart one more time during COVID, this drop over here, and this is where I had a come to the Lord of liquidity moment. I thought, hey, we're going up. I go, why wouldn't we go up? Why wouldn't the dollar funding pressures be so great? The world is locking down. Commerce has come to a standstill, and it's a once in 100-year event we've never seen before. The dollar should go up. You know what the dollar did? Came straight down. Why? Because the holy global empire said so. So if they want this dollar down, it's going to come down. And Trump is begging the Fed to cut rates, which means he wants dollar down. So
what's
am I going to bet against the holy global empire? I think not.
What is M2 doing?
M2, don't worry so much about M2. M2 is not nearly as
Don't worry
good.
so much about M2.
If we're going to take a look, you're talking about global liquidity, right?
Yeah.
M2 on its own is not a great measure of global liquidity.
What are you
But if
talking
we're going
about?
to take a look
You
at
brought
that,
it up to talk about money coming, 78-day lag, et cetera, et cetera.
yes, that's not M2.
Oh.
You wash your mouth out with soap. That's not M2.
Oh, what is that then?
M2, global dollar liquidity is taken into consideration a number of different factors. In fact, I have several different indicators that actually track that sort of thing. You guys get access to this one, as the other ones are in the tank getting prepared. Actually, no, one of them is their flow. You guys could always take a look at that. But global liquidity is still going up and to the right. And with the offset, it still says that it'll be, September, October before we even start talking about a peak. Now, it did make a lower high, right? So this was a high before, this is a lower high, and it didn't make a lower low. So it does lend itself to the idea that comes end of September, this party is over and we're going to be on the short side. But until then, there's enough time for things to get pretty crazy at the end here. And if we get past that level, because we haven't had any since what? We haven't had, usually we get multiple 30% pullbacks in Bitcoin on the way up, right? That's totally normal. We had a 30% pullback. Was it over here? We had 30% in 2024. What was this level over here? We had a 30% over here in 2025. Okay. So we could have another 30% drawdown, which would make sense to coincide with this sort of thing over here. Remember, the liquidity over here that fell down from 2025 to actually the liquidity actually fell from 2024 to 2025. This drawdown, which is over here, offset, coincided with this level, is 30% drawdown, right? This drop that we're seeing over here at the end, it's like 1/4 of that. So I'm not really looking at this going, hey, this is the cycle peak. I'm just thinking to myself, hey, I wouldn't be surprised of a 30% pullback in that period. But we'll see what happens with liquidity developing. I should mention, just so it's on the record, and I have not figured out a way of dealing with this yet, but every cycle that I've studied, every single cycle for Bitcoin, the cycle ends when you get a 50% pullback. That's the top. Now, I want to get us out before the 50%. And I don't know how to do that yet. But you know what helps? Send in your super chats, donations. Go ahead and share this with your friends. You can send your gift donations to PO Box 23756. And
No. There's no PO Box. There's no super chats.
okay, can I ask them to like and subscribe and go to sacredprofit.com and sign up for free?
That's probably a good idea.
Yeah, go ahead and do that. Go to sacredprofit.com, sign up for free, use our indicators, share it with your friends, share it with your folks, like and subscribe to the channel because it does help. And the more information you provide to me, the more of your attention you provide to me, the more money I make, the better tools I can make for you. That to me seems like a fair deal, that I put my neck on the line, my time on the line in order to make you, whoever you are, extra money. And all I'm asking you to do is press a button. All I'm asking you to press a button. Can you just create 3 dummy accounts, 3 Smurf accounts, and just get those numbers up? The advertisers don't care. Oh, but Tom, those Smurf accounts won't be active. Then log into them every single day and pretend that you're doing anything so that you can activate it. Cost you nothing. All right.
Your
Peter.
in the chat is laughing emoji. Your craziness.
I'm just trying not to beat around the bush here. The reason I'm doing this, other than the fact that my own megamania and narcissism prevents me from being quiet and I have to be in the public space, aside from that, the attention of others provides me purpose in my life, regardless if that is beneficial or infamous. Regardless of that, it's to make money for me and for you. Isn't that why we're all here? It's great. It's great, Peter, to be able to talk to an audience who themselves not only want to make money, but are okay with making money off of the suffering of other people.
No,
I just mean like things can happen in the markets where we're not in control, but there's a way we can take control by making money in order to make our family, friends, and community better.
Yeah, we can't say it like that.
No, I'm sorry. I'm saying that instead of just suffering, we could be the people, the grown-ups in the room that make the money in order to help those around us.
You plan on helping people around you?
I do plan if they treat me appropriately.
Okay. All right. Okay, so give me the game plan. Okay, so you're expecting, what was it, 117? What's the short? Give me the short and sweet of it. What's coming up?
10 o'clock tonight, we'll see what happens, but likelihood, we're aiming for 116.4 on the upside. A bullish move from here to 116.4. It could go all the way to 117.4 because we have a daily level that's nearby.
And when you're saying here, that's what right now we're at 114.6?
We're at 114.4 right now.
So say it again.
Absolutely.
114. Go ahead.
So we are at 114.457 as we speak. I don't know where we'll close at 10 p.m. tonight, but from wherever we close, which should be around here, I'm expecting to move up to 116.4. All right. So that would be a 1.7% move from where we are right now. So you can make 50% or more on that trade. It could go all the way up to 117.4, which would be a 2.6%. So you can double your position with that move. And I expect that move likely to happen between Monday and Tuesday of this week.
Anything on Polymarket?
So our Polymarket bet didn't go through. Yes, I understand that. But what did I tell you about the Polymarket bet?
Look, it's small enough that you can make asymmetrical payoff. And if it doesn't work, you keep rolling that on month to month. Not financial advice, do your own research.
That's right. If someone gives you 500 to 1 odds or whatever the hell it is, you take that bet every goddamn month, all right? That's what it costs. And so fine, it didn't pay off last month. We put that bet on today. And now that bet is back. Now that bet is back and you can get it here. Let me just pull it up. Bitcoin, is it August? What price will Bitcoin hit in August? And our trusty 150 is at 2%. So $100 gets you Sorry?
It's higher than last month. Wasn't it at 1% last month?
No, that was 1% halfway through the month. Is because we start, there's more chances for it to get there, so the odds are a little bit worse. As we move on throughout the month, the price will fall if Bitcoin doesn't go up. And I have limit orders set. Like if I can get tagged in, maybe Bitcoin Wix or whatever, I'm going to get in there. So $100 gets you 4,000 if you're right on this. What are you doing with your life if you're not taking these bets? You might be like, Tom, okay, fine. I don't want to trade. I don't want to do 50x leverage. I don't want to do any of that. Totally understand. Can you please just nut up and get your crypto onto Polymarket or Kalshi, whichever better market you want to deal with, and put the bet on?
Not financial advice. Do your own research.
No, I'm telling you, you're probably going to lose the bet. I've said this. But if you are going to win, the odds are so good. You get paid out so well. If we get to 200,000 this month, you're looking at 15,000. That's 150 to 1. Come on, guys. You're definitely going to be pissing away $100 or whatever amount of money you want, doing God knows what. Put down the sushi and put that money on one of these bets.
Okay. If you want, if you're willing to lose your money.
Expecting to lose your money. I thought I made that clear. Do I have to say, do your own research or not financial advice if I'm telling people they're going to lose their money?
I don't know what part of this is going to get clipped out into a short. I got to cover my base. I'm the video editor here. Please.
All right. Can we just like put one of those censor bars over my mouth, but it's like low opacity and it just says not financial advice, do your own research, or just flash it on the screen? Because frankly, it's getting a little annoying. It's getting a little old. Right? Everyone, you're the big boy and a big girl. You know you're going to be losing money. We just lost money over the last month. So what? We're here for the long haul. Because when it does pay off, whoo boy. And if it doesn't, you can just not like and subscribe anymore. Like I care what you do. Freaking selling anything. Financial advice. Not even selling anything. I got to cover my ass. Serenity now. Serenity now. The Polymarket bet has reset, and you could bet right now $100 in order to make $4,000 that Bitcoin gets to 150 this month, which is more than 2% likely. So take the bet if you want to. There. The short work for you there? Did they get it? Did we get the cut?
Maybe. I don't know. I don't know what the rules are. I know you wanted to talk about something regarding yada, 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 Federal Reserve, yada, 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 a country needs banks or something.
I don't know. In a conversation where this always right, sometimes wrong conversation, maybe it might not be the best environment in order to talk about that. If you guys are interested in Richard Werner on Tucker Carlson, talking about the nature of the financial system and the secrets of it, let me know in the comments, and I'll do it at another video this week, because I thought it was very fascinating, and it's literally the reason why I think crypto not only explodes, I mean, just completely, I think this whole idea of cycles will just go completely out of the water, and it's just going to skyrocket. All these major assets going to skyrocket, and that specifically Cardano is going to leave people in the dust. They aren't even prepared, don't even get it, just how big Cardano is going to be. Hoo-wee! It's going to be big. It reminds me very much of when the Ask Sam Altman, what was it, like 10 years ago? You're working on this AI, you're burning money. How are you going to make any money? How are you going to make that money back? And he says, well, ask the AI. And almost got laughed out of the room. And now Sam Altman is very likely to be one of the first public trillionaires. So when people go, Cardano, it's an old cycle asset, just bet on the new assets. Go enjoy your Luna and FTX tokens. People are like, oh, you don't know what's going on. Number go up. Go enjoy your Safe Moon and your Shiba Inu. Go enjoy your Pepe. You go do that. Go get your Trump coin. And you leave me and my Cardano alone. Because those of us here who want to make money, serious money over the long term, we can see a diamond in the rough.
Aladdin.
All right, Peter. We'll talk about that some other time because it's a pretty hefty topic. It's
fine.
near and dear to me. And when I start talking about things that actually matter to me, it'll touch me in my heart a little bit. I just want to make sure that this is like a safe space, a safe environment. I don't want people to sort of like feel bad about it.
The internet is like the definition of an unsafe space.
That's true. And you know what? I have to take ownership that I do take part in that.
Oh, that's good. That's good.
That's it for us for this week. The session of Sunday Fuel will be back next Sunday at 4 or aroundish, 4ish, like around there, like whenever I decide to like turn on the camera or whatever, in order to talk about more of the trades for the upcoming week and the week past. Guys, I'm here to help you make money and enjoy yourself doing it. And for that, I need your help. Click like and subscribe in order to help this channel and share it with anybody else that you would like to see prosper. If you hate your family and friends, don't share it. But if you love them, share it. I'm going to put that on the t-shirt.
Yeah, please do.
If you love your friends and family, share my YouTube channel. It writes itself. Feels good to say, doesn't it? All right, guys, have fun, and we'll see you next week.